start off with Old Mutual, which is the largest of the lot. It's Cape Town based, sorta. It's kind of headquartered in London too, though, because it went global in about the sort of period from 2005 onwards. Then had a fair amount of trouble in the global financial crisis, wrote off lots of disasters. It's in the process, though, of doing what it calls a managed separation, which is like what Gwyneth Paltrow and her singer husband did when they decided they didn't want to be married anymore. So they're now doing a little bit of a sort of a separation.
Yeah.
You'll tell us in a minute what the 4 bits are. Bruce Hemphill, CEO, is running that process out of London. 175.3 billion rands worth of market cap. So when I say these companies are big, they are. 23.7 price to earnings ratio and a dividend yield down there of 3.35%. So we'll put up the share chart while we wait, but tell us what the bits are and how the managed separation is going to work.
So there are essentially 4 components to Old Mutual. The big business is obviously Nedbank. They own a big chunk of Nedbank, controlling stake actually. Then they have a business called Old Mutual Emerging Markets, which is basically South Africa and parts of the rest of Africa.
And that's the insurer with all of the stuff we were mentioning earlier.
Yes, that's the pure insurance business. It's long-term insurance, predominantly short-term as well. There's also an investment management business where they manage assets on behalf of clients, but limited to the emerging markets
unit trusts, all that stuff.
That sort of thing. The 2 other components, which is really the components that justify the listing in London, is Old Mutual Asset Management, which is a US asset management business. They've wound that down.
It was like a firm which was made up of different boutiques. They bought it, they put it together, they listed it in the US, and now they're beginning to exit it by selling it all for the bits.
I think they've got like 20% left exposure. So basically they've almost exited it. And then there's Old Mutual Wealth, which is a combination of businesses that they bought in Europe,
the UK,
Scandinavia, and in the UK as well. They've sold a lot of the Scandinavian and the European operations now, so they're left with a very lean UK wealth management business.
Quite a chunky business, though, and they had hoped that somebody would either step in and buy that from them, like a trade buyer, one of the other competitors, or perhaps that they could list it in London. I mean, that remains potentially, I suppose, an option.
Yeah, although it seems that if you follow the rhetoric, they want to stay in with the high margin businesses. Now, investment platforms and things are not really high margin businesses. They're capital light. But, the focus seems to be, for Old Mutual anyway, to try and put in capital into their emerging markets business in Africa.
So if you own this thing now, the Old Mutual Wealth in the US is being sold off. You're just going to get cash for that. At some point, you will end up with potentially, if you're a South African shareholder, a piece of Nedbank, which you'll get in your own right, and a piece of the Old Mutual South Africa business or Africa business, emerging markets. What's going to happen to the London bit? Is that going to get separated out and you won't get a piece of that, or would you maybe? Is it clear?
They haven't actually given us a proper plan. They just said that they're looking at various options. So, one cannot even be assured of receiving a component of Nedbank as well. They might just find a buyer for Nedbank.
Yes.
They did a few years ago. I don't know if you remember, HSBC looked into it.
Was interested.
But what's interesting, though, is that if you take the sum of those parts, those 4 bits of Old Mutual, you're getting a valuation above 45 rand.
And the current share price is around 35 or thereabouts.
It's around 35. So, oddly enough, the investment case for Old Mutual is not really based on any specific fundamentals of the company. It's really based on valuation.
However, we knew about this split up for about a year already, and it just seems like does it just take that long? Is it lots of organization, lots of banking stuff, lots of reorganization that's required?
Yeah, I think
I'm going to fall asleep if it takes any longer.
I think there's a lot of regulatory concern, certainly around the banking side of it, but also, it's such a huge group, such diverse businesses. It's gonna. I would think it would take a lot faster. Amazon bought Whole Foods. It took 2 months.
And Bruce Hemphill, I know him. He's a kind of a go-getter type of guy. So I'm surprised that they haven't pressed the button and made it faster. There must be some reasons why it's going so slow.
And I think that's what the market's taking. I think that's why there's such a huge discount between the sum of the parts and the actual share
that
price.
It might just never happen, or that sort of some revision to the plan is going to be required.
Yeah.
So for you, hot or not?
Not hot for me, unfortunately.
Notwithstanding the fact that there could be some big uplift if the sum of the parts thing
I think
comes
I'm suffering from the same fatigue you are. I don't know when this is going to happen, and there's no clear timeline for it as well.
Okay, I'm going to pass and say not hot as well.